Welcome back, everyone. We are going to start chapter number 23 of your F6 notes. The same material is given to you in P6 notes as well. It's a self-assessment chapter for the companies. Alright, so you will have to find, if you're a P6 student, you will have to find the self-assessment chapter for the companies in your notes. Alright, for F6 it's chapter number 23. Right then, so self-assessment, so how we pay the tax, when we have to submit the return, how to calculate the tax, and all that stuff is given in here, and what are the penalties and stuff. So return is due for filing on or before 12 months after the end of the accounting period. So in the company, this is a 12-month period, so we are allowed 12 months after the end of the accounting period, so we can submit our return before or within 12 months period after the end of the accounting period. All right, the period in which the the period to which the return relates. All right, and after that it says if you are late, then there will be penalties. Now, if you're late up to 3 months, and depend on that, if it's your first time that you are submitting the return late, then the penalty would be £100. If it is a second time, so consecutive. So if you have been late in the first time and you are late in the second time as well, so it is a second consecutive failure, then it will be £100. However, if it is third or subsequent consecutive failure, then the penalty would be 5 times more of what it was for the first and second consecutive failure. Alright, so if it is first and second consecutive failure, the penalty is £100. If it is third or subsequent consecutive failure, the penalty is 5 times more. So it would be £500. Likewise, if you are late more than 3 months but up to 6 months, the normal penalty for the first and the second consecutive failure is £200, and third and subsequent consecutive failure 5 times more, £1,000. And if it is 6 to 12 months, then it's different. And likewise for 12 months, £200 plus 20% of 20% of the tax. And in the case of third and subsequent consecutive failure, it's £1,000 plus 20% of tax. Right, so you will have to memorize these things. Anyway, so payment of corporation tax. How to calculate the corporation tax? Now, large companies pay tax at the different date, whereas the small companies pay tax at the different date. Now, the large companies normally pay tax in installments, so four installments. So the large companies will be paying tax by 4 installments. However, the small and medium-sized companies will normally be paying tax as a one-off payment. How will we determine if it is a large company or not? Now, the company which is earning, whose profit is more than £1.5 million is a large company. Now, this £1.5 million will be divided by the number of subsidiaries it has. Now, if a company has 1 subsidiary, then this £1.5 million will be divided by 2, so the limit would be £750,000. So if in that case, if the profits are more than £750,000, it will be considered a large company. Alright. Likewise, if the company has 2 subsidiaries, then it will be divided, this limit of £1.5 million will be divided by 3. And when considering it is a subsidiary or not, it will be 51% subsidiary only. Alright, so when one company owns 51% shareholding in that other company, then it will be considered a subsidiary. Likewise, a group structure could be a little complex as well, which could be given in your exam. Say, for example, if a company A owns B company and then a B company owns C company, then the eventual owner, the top company, the A company, must have effective 51% shareholding in the C company. So if A company owns 100% of B company, and then B company owns 70% in the C company, then we will have to apply the 100% to the 70% in order to get the effective interest in the third company. Alright, I hope that you already know that. You have already studied at F3 and F7, and if you're a P6 student, you already know that anyway. So you'll have to see the effective interest, and if effective interest is more than 51%, that will also be considered a subsidiary, and then we will have to divide that limit by number of subsidiaries, including the holding company as well. Alright, so why are we doing that? We are only doing that in order to see if it is a large company or not, and if it is a large company, then it will pay the corporation tax by installments. Right, so 1.5 million divided by 1 plus number of 51% subsidiaries. Now, taxable total profit plus dividends. So this 1.5 million, what is that? It's not just the profit, it is taxable total profits, which we have seen earlier in our previous lecture, plus dividends from non-group companies. So we'll add the dividends as well. Now dividends normally are exempt from corporation tax purposes, but we are only adding it here to see if it is a large company or not, in order to only determine if it is a large company or not. It will not be taxable. We are only adding dividends in here in order to see that if it is a large company or not. So in order to divide that by a number of subsidiaries and holding company. All right. So we will take taxable total profits plus the dividends from non-group companies, and if it is 1.5 billion or more than that, then it will be a large company, and if it is less than that, it will be a small or medium-sized company, and this limit will be divided by holding company plus 51% shareholding subsidiaries as well. Right? Now, just beneath that, it says that large companies are required to pay corporation tax in installment, and amount of each installment will be calculated as follows. So we'll take corporation tax divided by a number of months times 3. And then large company is not required to pay by installment if it is their first year. Now large companies are not required to pay by installment in the first year unless their profit exceeds 10 million pounds. And interest is paid on underpayment. So interest on underpayment would be 2.75%. If we have overpaid, it would be 0.5%. We already know that. There will be a little complexities when the large company has less than 12 months accounting period or equal to 12 months accounting period. So there will be different treatment of the installment payments. Now, if it is 12 months, say for example, if it is 12 months, the accounting period is 12 months, then the payments will be, first installment would be on the 14th of the 7th month from the start of the accounting period. All right. So 14th of the 7th month in the accounting period. So we'll see that say for example, if a company has started from 1st of January to 31st of December, so that's their accounting period. 7th month in the accounting period is July, and so we'll have to take 14th of July. So that would be first payment, and the next payment would be 14th of the 10th month in the accounting period. So in that case, it would be 14th of October, and likewise the third payment is the 14th of the first month after the accounting period, so it would be 14th of January. And final payment, the fourth payment, would be 14th of fourth month after the accounting period, so it would be 14th of April in my example, in which the accounting period was from 1st of January to 31st of December. Alright, so we'll make payment like that. However, if it is less than 12 months, then it is a little complicated. So when accounting period is less than 12 months, then the first installment would be 14th of the 7th month from the start of the accounting period. Alright, so it would be, we'll say 7th month, we'll see the 7th month from the start of the accounting period. So we'll pay first installment on that date. So it is exactly like in the previous case. So it will be, say for example, if the accounting period is from 1st of January to 30th of June, say for example, so the accounting period is less than 12 months, so 1st of January to 30th of June. So in this case, the first payment would be from the start of the accounting period, 1st of January to the 7th month, so 7th month would be July, so the first payment would be on that date, 14th of July. Alright, now the second and the third, the subsequent installments would be 14th of the month, which is after 3 months interval of the previous installment. So the second payment and the third payment would be made after 3 months interval, and the payment date would be exactly the same, 14th of the month. And the final payment would be 14th of the fourth month after the accounting period. So we'll have to see what is the date of the accounting period ending. Say for example, it was 30th of June. So what is the fourth month after that? So it would be on the 14th of that month. So in that case, if say for example accounting period is less than 12 months, in order to reduce the complexities, what we do is we'll first calculate the first payment, then we'll calculate the final balancing payment. Then we'll have to see the first payment date, and after 3 months there will be another payment. So if accounting period is so short, it is possible that there will be 3 payments only. There could not be 4 payments. Alright, so we'll calculate the corporation tax like that. And just beneath that it says small and medium-sized company for 12 months accounting period or less. So if it is a small or medium-sized company, it doesn't matter if accounting period is 12 months or even less than that, the payment would be 9 months and 1 day after the end of the accounting period. All right. Now just beneath that it says note. Compliance check, discovery assessment, and everything is like as we have seen in our chapter number 17. And appeal. Now companies can appeal to HM Revenue and Custom, and the HMRC will assign an officer and who will give the decision within 45 days. If you're not satisfied, you can go to the tax tribunal. However, it is so costly that most companies do not go. Right, so that's end of our this chapter as well. Right then, so that's end of our this chapter as well. So I will see you in the next video lecture, and we'll continue our journey of corporation tax. Goodbye.